Well, welcome everybody. Thank you so much for being here for another edition of Empower Hour. This event's being brought to you by the Ohio University Alumni Association, where our goal really is to advance the mission of Ohio University by engaging you, our alumni, and our supporters. We need you to stay involved with this university that you love so we can keep providing new and amazing opportunities to current and future Bobcats. So thanks so much for joining us. Really excited that you took the time to be here. My name is Caleb Biesecker, and I'm the Associate Director of Alumni Experiences. I'm going to be your host for the day, and I'm going to kick us off by going over a few housekeeping items. And so first off, your cameras and microphones are turned off. Please be involved in chatting it up in that chat function. That really makes for a lot of fun. And I know our presenters love it too when there's kind of speaking and conversation that's taking place in there. So please be involved there. It's going to be a lot of fun. If you have any tech questions, be sure to put those in there. And I know Barb Fiocchi on our events team will try and walk you through that and help as well. If you do have questions, try and utilize that Q&A function at the bottom of your screen. If you utilize that, it kind of puts that question out to the side and lets our presenters see it a little bit more easily. So try and put your questions there, but use the chat for the conversation. If you want other attendees to see what you're saying too, make sure you change that to. Whenever you click on chat, it'll say who you're sending the message to. Be sure to change that to all panelists and attendees. I also wanted to let you know this presentation is going to be recorded as a resource for you all later. So I know you're going to love it. And when you do, be sure to get the recording and share it with everybody or direct them to the OUAA webpage where they can watch it because it's going to be a great program. And I know you're going to want to share it with friends. I also wanted to draw your attention for attending today in the chat. We've got a Bobcat store code, Empower0317. It's 20% off the Bobcat store if you need new Bobcat gear. There's some awesome Forever Ohio gear that's in there that's new. That expires on March 24th. Be sure to take advantage of that. And lastly, I'll just say be on the lookout for a follow-up email after this. We've got a survey in there so we can keep continuing and improving our virtual program. And it also has links where you can check out the giving page and give to that School of Accountancy, as Dr. David Stott was so quick to remind me of. That's an option on there. But also the OUAA webpage where you can find those awesome events with March Madness coming up. Just great events going on there. Be sure to check that out. So after all that, without further ado, I am going to turn things over to our presenters for the day.
Good afternoon, everybody, and thanks, Caleb. We appreciate it very much. I want to start by introducing myself, and then I'll turn it over to my co-presenters to introduce themselves. I'm kind of more playing MC than anything else today, but hopefully we can get you some good information out there. But my name is David Stott, and I serve as I'm a faculty member here at Ohio University in the School of Business or College of Business, but I also serve as the director of the School of Accountancy here at OU. And I think I see a few alumni in the chat box. So welcome. I'm glad to see you all here. That's a new word, right? We've learned that term over the last 13 months or so. I joke because we do things now that we swore were not possible a year and a half ago. So it's kind of fun to have everybody here today. And I want to thank you for showing up and giving us an hour of your time. Hopefully it will be well worth it. With that said, I would like to turn it over to Aaron and let him introduce himself, and we'll go on from there. You'll hear from me again momentarily.
So I am Dr. Aaron Wilson here at Ohio University. Also, I am a CPA here, licensed in the state of Ohio. I'm also a licensed certified fraud examiner. I teach audit at the undergrad and graduate level. I also teach in our online MBA program, Accounting for Executives. One thing that Dave was supposed to mention, and maybe he's going to come back to it, so I'll steal his thunder if he did. I've always wanted to say this. So if any of you have been in a presentation by a government organization, they come out and let you know that the views that they're sharing are their views and not the views of the university or of their specific regulatory organization or the commissioner. So this is my opportunity. What we share today are our individual views. They are not the views of the Alumni Association or the university or the School of Accountancy or the Center for Professional Accountancy.
Or
and
US
also,
Bank. Go ahead. Or US Bank. Throw another one in there.
Or US Bank. And any crypto that we talk about should not be taken as a recommendation to go out and buy it without doing your own due diligence first and making sure that it's something that you're comfortable doing. So there we go. I'll toss it to Levi.
Yeah, I'm Levi Lillenquist. I got a JD degree from the University of Minnesota many years ago, an LLM in taxation from the University of Washington. And I'm here today because Aaron is my brother-in-law. I first got involved in cryptocurrency back in 2019. I was looking for a store of value, bought a little gold, bought a little Bitcoin, and just got started. And this year, with the crypto market being in a bull market, got even more excited about it. And that's what led us here.
Cool. And by the way, thanks for the disclaimer, Aaron. You did a better job than I would have done anyway. So, all right. So the point today, folks, is really just to kind of give you a real high level overview. And I guess, we do have a couple of polling questions we want to start with. So I'm going to ask Barb if she'll pop up the first polling question. And it'll give us a kind of a flavor for what's out there. So take a minute, answer this as I'm talking through. It'll be interesting to see what the numbers look like. I know there's about 50 of you on this. Actually, 63 is what I'm seeing right now. So we'll give that a minute to populate. But I do want to talk about, this is in the news. And this is in the news. If you're not listening to politics, you're probably listening about crypto. This is in the news every day. And, just in the last couple of months with Elon Musk and Tesla, there's a lot going on right now. If you read through some of these bullet points, Goldman Sachs talking about the demand for Bitcoin. And of course, Tesla's big purchase, that was a huge deal, talking about, literally buying $1.5 billion worth of Bitcoin and actually planning on transacting business with it. So that'll be interesting to see how that kind of plays. And then if you look at the rest of these, points, you'll look at it, Bitcoin's everywhere. And we're going to come up to that in a second too, because Bitcoin is a cryptocurrency, but that's exactly where that discussion ends. It is one of many. And so we'll be talking a little bit about that today too. But then if you look, Spanish real estate agency accepting Bitcoin payments, you've got the gold bug going all in Bitcoin. And I found the last bullet point really kind of interesting and I'm not, this is, unfortunately, I'm an old white male. So sometimes when I say things, I don't want them to be considered incorrect from a gender or an equity standpoint. But it's interesting to me that we've got a lot of female investors in Bitcoin as well. So 40% of our active female users are trading in cryptocurrency. So I think it's really important you kind of see this. All right. So all right. Good deal. I like that. I was just looking at the results. I assume the results are on your screen too. So if you look, basically 3/4 of you don't own crypto. There's a few of you adventurous souls out there that do. So we'll talk a little bit more about that. Barb, if you'll pop up the second one, there's a question I have that now that you kind of have disclosed owning crypto, how many of you own something other than Bitcoin? Since that's the big one in the room. All right. Well, look, there we go. There we go. And a lot of you on the top line are dreading that you're not on the bottom line after everything that's gone on with Bitcoin in the last few months, aren't you? I'm just kind of going to pause for a second. I find this interesting. All right. These are good numbers. That's interesting. So 3/4 of them don't own Bitcoin. They own something else. So that'll play into your conversation a little bit later, Levi. All right, Aaron, if you'll advance the slide, the next thing we want to talk about is kind of what's going on in the marketplace. And what we have is we basically have this decentralized finance. And I'm going to let Aaron talk about that a little bit, what that means.
So, over the last several years, we've seen a significant change in the way things are done. Originally, you think about New York and being a financial hub, financial capital of the world. And it's because everything had to be centralized. And with centralized institutions came centralized power. And you had, people that have the ability to control money flow and such. One of the big changes that have resulted because of blockchain technology is this move to a decentralized finance. to where there's a lack of a central exchange. So you think about this, it's almost like the Big Bang Theory, right? Where it was this one large mass, and now all of a sudden it's very distributed among a much broader base. So decentralized finance, often referred to as DeFi, is a blockchain based form of finance that, again, doesn't rely on central financial intermediaries. These would be our brokerages, exchanges, banks, and so on. But these transactions are being made through intermediaries, but they are directly between participants, right? So when I sell my portion of Bitcoin to somebody else, it goes directly from me to them versus a clearinghouse process that maybe a brokerage firm has in place.
Kind of an interesting idea, and essentially, I'll paraphrase. It's cutting out the middleman, right? And so all of a sudden, we don't have the banks, the intermediary there. It's a peer-to-peer transaction, and those of us in the world of business understand that the more people you put in the middle, the more the price subsequently changes, because everybody's got to get their piece, so to speak. So I do find this really interesting, that this is really a different world. I had a conversation with Aaron and Levi over the last couple of days as we were preparing for this, and talked a little bit about the internet and the decentralization of information that happened, now 25 years ago with the internet. And that's kind of how I look at this is a decentralization of finance. So anyway, cool. Speaking of, I'm going to ask Aaron and or Levi, as the case may be, to talk about blockchain. And I have been talking about blockchain since 2015. And, I consider myself, I'm an educated guy. I consider myself relatively intelligent. And let me tell you, I think I read about this for 3 years before I really started to get my hands around it. So explain blockchain a little bit more.
Okay, so I'll take a first shot at it. Blockchain, it's a specific type of database, okay? At the end of the day, that's what it boils down to. And it's the way that this database stores information that makes it somewhat unique. So it records transactions sequentially in a linear fashion. So once one transaction ends, the next one starts. It's almost like sausage links, right? And so once a block has been recorded, another one of the unique features is it can't be changed. And that's one of the big strengths to blockchain technology, is that once the block has been written to, it stays that way. As it says here, common transactions are for ledger transactions, common uses. I was talking to somebody from the state auditor's office, this was about a year ago, about using blockchain technology. And he was saying that from his perspective, an area that would be fantastic is real estate transactions. So if any of you have bought a home, you have to go and you pay the title, pay for a title search. You're also paying insurance in case the title search company misses what they're looking for and someone else actually owned the home. And surprise, a couple years later, they come out and say, wait a minute, you bought my house and it didn't belong to the person you bought it from. Well, this blockchain technology, it removes all of that confusion, right? It's a standing ledger that can't be changed. And so you think about just implemented in this narrow range, all of a sudden, it really eliminates the need for a title search. It eliminates the need for title insurance because, once it's been recorded, it will be a running history, and you'll be able to go back and see every person who bought this house, the date they bought this house, the price they bought the house at, because it's time-stamped and will never change. So it has the potential, I think, to be very disruptive. Things that we've done the same way, for decades and decades, all of a sudden we can do easier, we can do safer, because we eliminate some of that transaction risk that arises. Another thing with blockchain, it goes back to that decentralized finance. Not any single person has control of this. So it's not like it's run through the New York Stock Exchange. It's decentralized, which means that this ledger is maintained on multiple computers and gets synchronized. And by taking that power away from, a couple large entities, all of a sudden it becomes much more, I would say, equitable.
So I've got a couple of questions that have popped up, and I'm watching them, but I want to bring them up at a certain point in time. So I'm going to let you continue, because I want to get into what's going on as far as the market cap and crypto is concerned, and then we'll get into some of these specific questions, because I think there's a couple of really good questions there, and I do want to get them asked. So what is going on? What's amazing to me is the speed at which this is moving, and of course we all know technology speeds up everything we're doing, right? I mean, when you think about all those wonderful things in the world that are so much faster now, but I think when you look at the market cap of crypto and how much crypto is out there, it spooks me a little bit. I'm kind of like, wow, so.
Was there a specific question that you want us to address?
No, I wanted you to go to the next slide and talk a little bit about kind of how it's changed.
Okay. So we see that, it was fairly slow as far as the adoption went. We see it really starting to pick up in 2017. Today we're sitting at a market cap of about 1.5 trillion. This includes all types of crypto. If we look at the next slide here, this is crypto minus Bitcoin. So Bitcoin's the 800-pound gorilla in the room. Here we're still sitting at a market cap of $600-700 billion of value. And when we look at this picture here, this one's truly interesting. So this shows Bitcoin dominance. And again, those early years, Bitcoin had 90+% dominance. Bitcoin was the cryptocurrency that people bought or owned, right? And we see, again, starting in about 2017, this shifting to where there are much more, there's a diversity of cryptos emerging. That Bitcoin dominance has come down. We're sitting right about 60% now. So it's still the major player, but we're also seeing kind of a second tier forming. And you could argue that there's Bitcoin, the top 10 below that, and then kind of everybody else, which are much smaller.
I find that interesting, because what we hear about, that's why we started with the two questions about crypto and Bitcoin. We hear a lot about Bitcoin. So I'm interested that 3/4 of the folks that own some type of crypto aren't in the Bitcoin world. Now that could be because of what Bitcoin costs these days, but I do find that rather interesting. I do want to take a minute then, before we get into the different types of coins and what that means. I want to ask the first question up here. There's a first question I'm going to stay away from for a minute, because I'm going to come back to that at the end. But the second question, is Bitcoin really monetary vaporware, and where is the store of value? I'd like the Dutch tulips comment. Where is the store of value? And this is a question I had for a while. Where is what underlies this? What is there? What's there?
Yeah, I guess I'll take a crack at that as far as store of value. I guess one of the things that I look at is that Bitcoin's market cap is increasing. More and more people are buying it as a store of value. On average, it has increased about 200% a year in its value. It has scarcity. Only, I think it's 21 million only 21 million Bitcoin will be mined over the course of its existence. So it has that scarcity aspect to it. And I think we're seeing its adoption level. And I think it was the coronavirus. I think it's stimulus. I think it's the printing of money that people have looked at it and said, for me, the dollar is going down in a big way. Where can you find value? Where can you retain value? And institutions now are looking at it and understanding that Bitcoin's got that value. It has that scarcity, and it's got that momentum right now. And so I think that's where it's got a store of value, some of those aspects.
I would like to add to that, and we'll get to this in a couple of slides, you have to be very careful because not all crypto is created equally. There's, as many, if not more, junk crypto coins out there as there are coins with value. And if you start looking at these, in a minute, I'm going to pitch another question to Levi, but a number of these coins have technology. They have something behind them motivating them. So Levi, just off the top of your head, can you think of a coin that has, basically intrinsic value based on the technology that's behind the coin?
Well, we look at something, Ethereum is the number 2 crypto right now, and some people think it will overtake Bitcoin, could overtake Bitcoin in market cap over the next 10-year period. And it's its own network. Some people call Ethereum digital oil, whereas they call Bitcoin digital gold. And it's just this network upon which a lot of these, we call them dApps, decentralized applications, are being built. And the value is you've got this decentralized network that allows for the building of these currencies on it. Polkadot is another network that will be going live here pretty soon. You've got Cardano, which is essentially coming live as well. And that is their proposition, the technology behind it, and that they allow these decentralized applications to be built on top of them, and to allow for this new financial system.
One other thing that Levi had mentioned a couple minutes ago is the finite number. So again, you have to be careful with the coins you're looking at. Some have the ability to keep generating, right? So you think about, if this was a stock, it's a company that's able to come out every 6 months and issue, new shares. And you say, well, wait a minute, there's a lack of value there because over time it's just being diluted. The thing with Bitcoin, 21 million shares, I looked it up, there's 42 million millionaires in the world. So there's enough Bitcoin for everybody to have, for each millionaire to own half the Bitcoin. Well, Tesla bought 50,000 of them. So,
took some of those off the market.
Elon Musk took more than his share. So there is some of that, right? And as Levi alluded to, we have an issue with fiat currency is that, essentially governments have the ability to keep printing as much as they need to. And so in periods of possible inflation, people are looking to these cryptos that have a finite quantity as a possible inflation hedge because of that finite quantity that's out there.
All right, I'm going to read another question to you because it's kind of interesting. And actually, I don't know the answer, so I'll be interested to hear your reaction. So what is your reaction to Bill Gates's recent comment that this type of product is extremely draining of energy resources and is very slow and thus may not be fully embraced as everyday currency?
I'll take a shot first, Levi, and then get your thoughts. I would say that's absolutely true. People that set up the mining operations, it does take an extreme amount of computation power, which draws on energy, electric consumption. There are newer technologies coming out. So Ethereum is out now. Ethereum 2.0 is in the works, and it's designed to operate much more efficiently. So I think the crypto market is seeing that, and over time they're evolving to come out with new versions of their coins that are much more efficient.
Yeah, I would agree that there will be technological innovation. I know MicroStrategies is a group that has bought a lot of Bitcoin, or a company, publicly traded company that's bought a lot of Bitcoin and intends to buy more. And I know that Michael Saylor and the Winklevoss brothers, who are the Gemini Trust group, and others have gone to MIT, and they're working together to kind of bring some innovation into Bitcoin, into its payment network, and also into mining, so it will be more efficient as we move forward.
It's interesting. That's a good lead to the next question. All right. In your opinion, are you better investing in more blockchain technology, the blockchain technology itself, or cryptocurrency? And I think that's an interesting question.
It is an interesting question, and I see them as the same. When I've invested some in Ethereum, some in Cardano, some in Polkadot, these networks, and I see that as investments in these specific cryptos, but I also see it as investment in blockchain technology because of what they can do. I mean, Cardano, essentially, Charles Hoskinson, the founder, said, "Hey, if you want to help get rid of voter fraud, let's go ahead and Cardano can help you with that. We can put voting registration on the blockchain. We can track it, and we can do some things." So I think the way I see it is, when I invest into some of these cryptos, I am investing into blockchain technology.
And my 2 cents is, off the top of my head, I can't, I'm sure they're out there, but I'm having trouble thinking of publicly traded companies that are engaged solely in blockchain development. I would say do both if you can, right? Invest in the stock, invest in the crypto, and it's a win-win, because this technology is here. MasterCard is now dealing with Bitcoin, and so I would expect within a year that all the major credit card companies are going to be transitioning to accepting crypto. And not only that, they used to accept it, but then it was liquidated and the vendors were paid out in cash. Now they're getting the option of taking the purchase in crypto and keeping it in crypto. So we're seeing mainstream financial institutions embracing this change.
Speaking of, that's an interesting one, and I happen to know the asker of this one. Beck, I appreciate the question. Do you expect the removal of the middleman to remain or to continue to be legal? And I believe it's not legal to pay for things directly with gold, for example, using a large amount of gold or silver to buy a car from a business. And this is a conversation we had privately about Tesla and buying your Tesla with Bitcoin. So do you think this is going to continue? That's a really loaded question.
I think there's regulation on the way fairly soon. It's something that's on the government's radar. I know that some type of regulation is going to come in. I don't know what's going to happen. The interesting question to me is, what do you do with people who are using crypto as a currency, buying a Tesla, and how are you going to tax them? Those are the questions, and I think regulation will be coming that will answer those questions. And but at the end of the day, I do hope that we don't get the government as a middleman in every transaction.
So my thoughts real quick. There are some places that I think they could play an important role. So currently we get a number of new crypto being issued, that initial offering is not regulated. So whether it's the SEC, some other organization, I think that they could serve as an effective gatekeeper in weaning out some of the garbage that comes out there. We're talking pre-presentation, roughly 90% of crypto, collapses because there's nothing backing it. And that's because there's no barrier to entry into this market.
Aaron, go to the next slide, because I think it's important that folks see this, because you're talking about all that stuff right over there in the lower right-hand corner of the screen, right above the US dollar token, all those little bitty boxes, okay? This is just a heat map, folks, of the different Bitcoin that's out, or excuse me, the different crypto that's out there. So go ahead, Aaron. I didn't mean to interrupt you, but I wanted you to talk with this slide up.
No, so I was saying, regulation on the front end. I think at some point the IRS is going to get involved because the tax man always wants their tax money. And currently, these transactions are taxable events, but because people aren't receiving a tax statement at the end of the year, I would venture to guess a lot of the gains aren't being reported, on taxes. And then, just last week, the Secretary of the Treasury and the Federal Reserve Chairman came out and they were talking about the need to issue a U.S. Fed Reserve coin. Okay, so the U.S. government is getting in the space of cryptocurrency. I don't see them ever becoming the middleman. I think, there are even a number of publicly traded companies out there, stocks, that engage in this decentralized finance, right? You no longer need to go to a brick and mortar bank to get a house loan. So much of this, the banks that pay the best interest rates and have the lowest mortgage rates are banks that don't actually exist in a location that you can walk into. And so by removing that middleman, I don't think the middleman gets replaced.
Well, and I, there's a couple of questions that have come up, and they're questions actually I like to answer, because these are the questions I had over the course of the last few weeks. The one actually to the chat box, actually Bob just reposted it over the Q&A. Can you dumb this down for those of us that cannot get their arms around the basic concept? Can I purchase an auto or a cup of coffee with crypto? If so, how does it work, since I only have cash and credit cards in my wallet? And second, if I were to invest in a crypto company, am I buying stock in a corporation? And if so, what are the underlying assets of the corporation? So the reason I like that question is because it was my question. Okay, that was my question a couple of weeks ago. It's like, I put everything on my American Express card. If I can figure out how to use crypto to pay my American Express bill, we're gonna have a nice conversation about this. But Aaron, what was your response to that when I said that? Do you remember about the crypto credit card?
I don't.
Sorry. Okay. The conversation kind of centered around the fact that just wait, right? The short answer to Bob's question is no, not yet. But I think Elon Musk made a point of saying, hey, I'm buying this crypto and I intend to do business in this crypto. And so all of a sudden now we don't have fiat currency, cash changing hands. We have crypto changing hands. And I think that becomes a whole new ball game. And just to be clear, somebody else asked about, the legality of this. It is legal at this point. There's nothing that says it's not, because it's just an exchange. All right.
But I would venture, because there's been a number of rumors, within a year, Apple, I'm sure, will allow you to use your, Apple Pay and link your crypto wallet to it and pay. And it may just be Bitcoin, right? It may not be the full range of cryptocurrencies that are out there. But it'll be there.
Yeah, and PayPal has entered the space, and they allow for payment they allow you to hold Bitcoin. I think it's Ethereum, Litecoin, Bitcoin Cash, and make payments with those. I just saw the other day that Mark Cuban told the Dallas Mavericks season ticket holders that they could purchase tickets in Dogecoin. So I think it's becoming, it's possible, but it's definitely not mainstream at this point yet.
And quickly, I want to address Gerard's question about a lack of equity in disadvantaged neighborhoods. You know, one of the reasons the Federal Reserve is advocating for a Federal Reserve coin is because they realize that there are communities that are underserviced and don't have access to local banking. And the idea is this decentralized approach. You no longer need a bank. You know, there was another team that came out recently that basically said the players have the option of being paid in crypto, right? So we could very quickly come to a point where instead of, you know, you getting your paycheck in US dollars, you have the option of getting it paid in US dollar coins, or something generated by the Federal Reserve. And, you know, then it cuts the banks out of it completely.
Lots of questions popping up. I like that. All right, let's keep going, Aaron, on the next slide and talk about the different types of coin, just because I want to get a little bit more of the facts out there, and then it looks like we're going to have plenty of additional questions coming in too.
Okay, just 20 seconds on this slide. Bitcoin is the main player. Ethereum is the number 2 as far as size. Then if you look, you know, you could clearly come up with kind of a tier. You know, Polkadot is the dot there. Cardano that Levi talked about is ADA. You know, there's even a large amount here in US dollar tokens. And then we move into this much smaller realm. And so just as a word of caution, I would just be careful in this world of very small cryptos, right? It's like a beach ball. I'm sure could see incredible returns, but they're going to come down just as fast. Right. Just be careful with something. And I would say, accept Warren Buffett's approach. You know, if you can't articulate what the coin does or the technology behind it, don't buy it. Okay, types of coins. Bitcoin is our main player. Levi, were you talking about this one? I forget. I'm sorry. I'm a professor. Start talking.
Yeah, go ahead.
Okay. So Bitcoin is the big player. Altcoins are the term that we use basically for all the other cryptos out there. And then there's a category called stable coins. And these are coins that are tied to various fiat currencies. And so in your mind, think kind of like a money market account. You know, so you have a money market account. It tries to match, you know, a 1-for-1 to a US dollar. That's what you would be seeing basically when you were buying a US dollar coin. And almost every country has their own stable coin. India, for example, the big talk in the last couple of weeks is they want to pass legislation where their citizens can only own the Indian stablecoin, and that they would have to liquidate any other cryptocurrencies that they own. Because, you know, the worry there is that people are losing faith in their local currency and going all digital because it has a better store of value, and the, you know, the long-term economic impact of that.
Nice graphic. It's a very busy graphic, but it just gives you the idea of kind of what's going on. And you know, Aaron, could talk through this if you want, but I mean, I think the graphic is pretty self-explanatory.
So the big thing here is if you want to open this or open an account, it's fairly easy to do. Probably less than 5 minutes. to open a personal account. You have to bring fiat currency into your account in some way. So whether that's a wire transfer or using a credit card, to move money into it, there's that initial transfer. Once you have US dollar in your account, you can buy, a range of coins. And then, so say I transfer in $50,000, I buy $50,000 of Bitcoin. And tomorrow I say, you know what, I like Ethereum. I'm going to sell $5,000 of my Bitcoin, but this is the thing, I don't have to take it to US dollars. I take it directly to Ethereum. So this exchange, the dollars are no longer the medium of exchange, right? It just gets you into the game. Once you're there, you're able to convert Bitcoin into, 50, 100 different cryptos directly.
All right. Let's talk a little bit about you've used the word exchange, you've used the word, wallets. Let's really briefly, and I'll let, Levi briefly explain the difference between these. And then we'll probably move into just a lot of the Q&As because there are a lot popping up at this point. So I want to kind of go through those as well. I'm watching our time, so I want to make sure that we get there's a couple of more advanced slides out there that talk about staking and gas fees. We may not get to that today because I think there's a lot of just fundamental questions being asked. So Levi, you want to explain kind of the differences here?
Sure. So you have your crypto exchanges. In the US, Coinbase is the most popular crypto exchange, most used. That's where you onboard your fiat and you'll make your first crypto purchase. Just as a side note, there are platforms where you can buy crypto and just hold them as an investment, like Robinhood, eToro, Uphold are ones that come to mind. But here is exchange where you actually buy Bitcoin, it becomes yours. You have the ability to move it to a crypto wallet. You'd set up your own crypto wallet. There are lots of crypto wallets out there. Coinbase there's a Coinbase wallet, Trust wallet, Atomic wallet. These are just a few that I've used. So when you purchase crypto, you can keep it on the exchange, and then you can buy, sell, and trade. You can move it to a wallet. A wallet's something that you set up to hold it personally. You set up and you actually get, we say you have the keys to the wallet. When you set it up, they usually give you a 12-word code that is unique to your wallet. It allows you to store your crypto in a private manner and to keep it. And as long as you keep your keys private, nobody else should have access to your crypto. In the crypto space, and I just listen to a lot of YouTubers, so this is just kind of hearsay type, is they say, if it's not your keys, it's not your crypto. So if you do intend to keep the crypto, you move it to your wallet. Now we call crypto banks. Crypto banks are kind of like these in the crypto world that almost call them centralized, decentralized finance, where you have something like BlockFi or Nexo or Celsius are a couple that I've actually tried out and used, where you can move your crypto into these interest-bearing accounts. So for example, BlockFi pays 6% on your first 2 Bitcoin APY, and they pay that out on a monthly basis. So that's what we'd call crypto banks. So yeah, cool. There you have it.
Cool.
The one thing I would like to add to this is, and I told Dave this a little while ago, one of my frustrations entering this area was the lack of uniformity across these platforms. So if you want to buy a specific crypto, it may not be, and it most likely will not be listed on all exchanges. So, there are websites that you can go to and say, okay, I want to buy this crypto. What exchanges is it listed on? So you may have to have multiple accounts, right? And I think over time, we will see some uniformity where the exchanges will cover a broader range, things like that. But getting into it, if you're looking at kind of the top 5, you're probably pretty solid on any exchange. If you're looking for more of these kind of nuanced cryptos, you may have to shop around and open up several accounts.
I find it I find it interesting, and I like I said, I'd like to just go into a few of these questions because I think there's some really good ones here. So basically, I had one down here. It was lower, and I'm not taking them in order. So, what regulates the value of the cryptos, and is it investment or is it currency? And I had this question from the start too, and the accountant comes out at me every once in a while. So I see Levi smiling. Does Levi want to answer if this is what your opinion?
I think crypto can be an investment. It can be a currency. For example, I've heard that in Germany, they allow you, if you use Bitcoin as a currency, they're not going to tax you on it like an investment. But if you hold it long term and then sell it, they're going to tax you like an investment. I'm looking forward to the day when that type of tax regulation comes to the US. So I think it's just both is the answer. Some people do use crypto now as a currency. I think at this point in time, it's mostly an investment.
That's kind of, as I've researched this more and more, I that's kind of where I've ended up too. So,
well, we say that, and I think in places like I believe Argentina, or not Argentina, some of the Central American countries where their currency has just gone completely to zero, they have on wide scale basis adopted cryptocurrencies as their form of currency.
all right. I'm sorry. The very last question is one that I talked about just this morning in one of our prep meetings. If you want to invest in crypto, how much of my portfolio should I allocate? And should I be spending money I'm not willing to lose? And is this a stable technology? And I'm sorry, I'm going to speak my opinion for just a minute. I view this like the stock market. Okay, you want to draw that analogy between currency and investments, right? Yeah, personally, I always say you don't bet the rent money, right? And so it is legalized gambling to some extent, but no, it's educated also. And so you're making educated assessments of where you're at. You've heard Aaron and Levi both say multiple times during this presentation that you need to do your homework, right? And there's a lot of crypto out there, and there's good crypto, quote unquote good crypto, and there's bad crypto. And so you need to make those assessments. But I do think it's one of those things that it my favorite answer to every question. What is that, Aaron?
It depends.
Thank you. And so I think it really does depend on where you are in your investment portfolio, and I know my savings account earns 0.1% interest. I'm a little tired of that. So, do I want to take some of that? And sorry, I do believe I would like that since he works for a bank. So I think that's something you need to think about. But I do think we need to understand, the risk return relationship too. All right, you want to do another question? We're running out of time, so let's see. I apologize. There's a lot of questions here we're not going to get to. And I tell you, I will go over these and try to answer them privately later. But I find this: would there be an issue with the company paying employee bonuses in Bitcoins, and are there any regulations for preventing it? I don't think so. I don't know if Aaron or Levi have anything they want to add to that as far as compensating employees with Bitcoin.
Companies are doing it.
Yeah.
So it becomes a tax issue, right? It's compensation. It would be recorded as compensation on a W-2 at the value the day that it was issued, right, to the employee. but I don't see any reason why you couldn't. And as I said, a number of companies have already started doing that.
Yeah, and I saw Russell Okung is an NFL player, and he's the first to elect to receive a portion. I think he receives 10% of his salary in Bitcoin.
Interesting. I didn't know that. Why is crypto different from me manufacturing physical money on my laser printer? I like that question. I don't. I figured I'd just play stump the crowd here. Why is this different?
I would argue if you could find a market for that currency that you print on your laser printer, maybe it would be comparable. But it's the thing with crypto, you look at normal US markets, right? Eastern time opens at 9:30, closes at 4. You can get some extended trading in there, right? Before, after hours on some exchanges. Crypto runs 24/7. I can get on at any time and buy or sell. We had a pre-presentation meeting, on the side. I got on, I bought some crypto, right? You could do whatever, whenever. So, and I would probably also argue that there are some crypto coins out there that are the same value as what you would print on your LaserJet printer. So it's being selective in what you're doing. And that's part of the problem. It's unregulated. So you really have to sift through, and it's like sorting the wheat from the chaff, right? You need to be able to sort out all the junk and not get caught up in the fear of missing out or the hype. A friend may say, oh, well, I made 10 times, my investment on this no-name crypto. Well, it can come down just as quickly, but the top 10 are pretty solid. Understand what they do. It's like any stock. There's supply, there's demand, there's profit taking. When Bitcoin ran to 60,000 and pulled back to 55, I don't think that surprised anybody, right? Because a lot of people are saying, wow, I'm going to take some of that money off the table and I'll get in at a lower price.
Do me a favor, go to the slide on efforts to evaluate crypto, because I want to put that up and leave that up for a few minutes. That slide. Thank you. Do your homework. Okay. And you've heard that over and over and over again from all three of us. Do your homework. And there are several sites, and we will make sure that this gets out to you as well. And so you don't have to copy it all down now. But there's lots of sources out there. So basically, there's some free sources, obviously some pay sources if you're willing to pay. But it is, I joked about this over the last month or so. This is the Wild West right now, in my opinion. There's a lot going on. Okay, there's a lot of folks entering the market, leaving the market, and one of the questions that came up is, why so much volatility? And it's a supply-demand equation, right? One of my lecture points when I teach in just basic financial accounting is what drives the price of anything, and the bottom line is it's what a willing buyer and seller agree to. Right? That's what drives the price. And so market is whatever a willing buyer and seller agree to. And to Aaron's point just now, the market changes on a day-to-day basis and something happens. And yeah, people like Elon Musk and Bill Gates say something, other people listen. And so that could drive numbers up or drive them down. But every time you buy a stock, if you think about it, you're buying a stock because you think the value is going to go up. Well, the person you're buying it from thinks the value is going to go down, or he or she wouldn't be selling it to you. So that's, you're basing your decision based on where you think it's going. And so I think that it's really important. This is no different, right? And so when you get into this, you have to, go in with your eyes open and say, okay, these are choices I want to make. I'll let Aaron and Levi chime in on that too if they want.
No, I would say the same thing. This isn't something where you go out and take a mortgage on your house and dump it all in Bitcoin. I've talked to Levi. My strategy is I'm cost averaging in, right? So it goes up, fine. If it comes down, fine. I'm a long-term holder of a set, selection of cryptos. But I don't know, anyone who's been following the NASDAQ for the last month, why has it retraced 10% while the Dow is hitting, almost every day 52-day highs? Why did Tesla go from $900 a share to $550 last week? Is it worth, almost half of what it was a month ago? Sometimes the market's just fickle. And, if you ever see, again, this is me speaking personally, not making recommendations, but if I ever saw Bitcoin drop to 30,000 from 60, I'm a buyer on that day because, I'm a long-term crypto bull. Again, specific cryptos. There are a lot of junk cryptos out there.
Yeah, I would agree. Don't invest more than you're willing to lose. There is risk in investing in cryptocurrency, just as in any other investment. That being said, do some research. If you're just getting into the space, the recommendation is take a good hard look at Bitcoin. Personal opinion is that any crypto portfolio should have some Bitcoin in it. When you think about volatility, and to me, this is what tipped me off into getting into cryptocurrency, is the value of the dollar has decreased about 90% since the year I was born in 1974. So, maybe you want to find something that's actually increasing in value and not decreasing in value.
And I want to go back and answer the very first question really fast. And I realize we're out of time. But this question, my son has expressed an interest in this as a career, and I'm here to learn more about it, the good potential option for him, and your suggestions on how to go about studying this. All right. And, I'm an academic at heart. I'm a CPA by training, an academic at heart. If this is what you want to study, first of all, you need to be someplace where this is front and center in the discussion. And I'll put my plug in for Ohio University and the College of Business at that point, because this is what we're talking about now. And this is something that is invading a lot of our conversations. And so from a pure classroom standpoint, this works its way in. This is what we do research in. Aaron and I are in the process of writing an article right now about some of the tax implications of cryptocurrency. And so this informs our classroom activity. Do we have a class in cryptocurrency? The answer is not yet. Although I can see that, maybe, 10 years ago, we didn't have a class in data analytics, and look at what we're doing on that today. So I think it's important to understand that the education process is, you need to be in accounting and finance in those areas if you really want to study this more deeply. So that's my plug for higher education. And I realize it's 2:00, and Caleb's on the screen. You know what that means? I see the hook coming out. But I do think, there were several questions asked. There were technical questions asked about mining, and we appreciate those. We were going to close this, Caleb, with, is there an interest in crypto too, to talk about more advanced topics? I will make sure you have our contact information, and we'd love to play in this world a little bit longer. So thanks, Caleb.
Yeah, and thank you guys so much for joining. It's like, wow, so many questions coming in. People love this topic. So interesting. That's what Barb put in there. Hey, we might have to have a crypto too. And I know you guys were talking about it. And so that is something that we'd like to do in the follow-up email that goes out. Would love to get you contact info, all of you viewers, contact info for these guys. So maybe a second edition of this or a further discussion might be able to take place, and maybe even down the road, at the Alumni Association, we might be interested in trying to steal you guys away for another hour, just because this topic's so awesome and so many people are interested. But thank you, Aaron, David, Levi. I appreciate you guys a ton for doing this. You guys are always helping Bobcats, whether it's current students or our alumni like you did today. So thank you all so much. Again, be expecting some email follow-ups, I'm sure, from the people that attended today. It was such a great session. And I want to say thank you to our viewers for coming and joining us. I hope you had a great time. Really, really thankful that you could join us, and I hope that you enjoyed it. A reminder, Empower Hour will take place again next month on the third Wednesday, so be sure to check that out. I believe the next month we're going to be talking about esports, which is another kind of up and coming industry and just something kind of new and innovative. So that'll be a lot of fun. Don't forget the Bobcat store code that's in the chat. Go and get your Bobcat gear to support the Bobcats through the tournament. That might not get to you by then, but maybe you can celebrate some wins when you do get it with it. And be sure to check out the Alumni Association page where you can check out more events like this, be with other Bobcats and celebrate what's going on at the university, because it's great things right now. So thank you so much, everyone, for joining. Thanks again for presenting, guys. I look forward to talking with you and working with you in the future.
Thanks, Caleb. Appreciate it very much.
Take care. Thank you.
Thank you. Bye-bye.